please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. And the markets, of course, at the moment, Sensex and Nifty both flattish but in the red. What is taking a sharper knock currently is the Midcap Index. But one stock to watch out for has been ICICI Bank. Even though Bank Nifty is not the worst performer in terms of the key indices, but ICICI Bank has been weak and the single largest dragger for the Nifty 50 as well. And this is after the last 2 days of weakness as well. Mangla.
Absolutely. You spoke about ICICI Bank. Just pull up L&T as well. That one's taken a sharp knock of 2% of the high point of the day. It is an index heavyweight along with ICICI Bank, causing a bit of a pressure onto the Nifty. And remember, we're at 10,150. Yesterday, during the day, we managed to hold above that 200-day moving average and closed below that, and right now the 200-day moving average of 10,170 becomes an important mark, more so because the Nifty Bank is underperforming a little bit. It's the Nifty Bank weekly options expiry. Was looking at a couple of options. We're at 24,200 right now, so the 24,500 options saw a lot of writing, but 24,400 call should come up for you. There's a 24,000 call, 24,400 call. That one's added a phenomenal amount of open interest, so maybe the bulls believe there is no upside for the Nifty Bank and the bears have that traction. At the lower end though, the bulls believe that they can protect to 24,000 put. There we've seen a fair amount of writing. The premium has fallen about 83%, so that is something we'll watch out for. 24,000 on the lower end, and at the higher end we're seeing some writing at the 24,400 call.
Oh yes, and so that was about the Indian markets, but let's also quickly check on the global developments. And the US Federal Reserve, remember, raises interest rates by 25 basis points, forecasting at least 2 more hikes for the year 2018. Following Fed's move, the People's Bank of China increases the cost of short-term loans to commercial lenders, thereby tightening the policy. And US President Donald Trump is set to announce tariffs on Chinese imports later in the night today. Now in Europe, the investors will monitor a meeting of the Bank of England. Expectations are that the governor will continue to keep the bank on a path to a rate increase in May.
Right, on that note, let's also hear out what Arvind Sanger of Geosphere Capital Management and Jeffrey Dennis of UBS have to say on the US Fed's rate decision and the overall growth outlook for the world.
All we're doing is going from extraordinarily low interest rates into some semblance of, of having a rate cycle. So the idea that the global economies are so fragile and emerging markets are so fragile that they can't sustain going from extraordinarily low to just low is I think hard to believe. So therefore we think that interest rates going back to some semblance of normal range, and still at the low end of normal ranges by any other historical measure in the last 8 years, is not going to kill either global economies or global liquidity. Clearly, we needed extraordinary liquidity during the last few years to regenerate growth. But I don't think we need it anymore because global growth is fine.
A delicate situation in terms of U.S. yields and going up potentially, and the Fed tightening, but we actually thought the statement was a little bit less hawkish than anticipated because we had thought they would come up with 4 rate hikes for 2018. In other words, the dot plot would move up by 1 rate hike, and that didn't happen, although, of course, the voting was very marginal.
All right, so those were the important voices, and we'll get you more on that. But one flash on the screen, Dish TV is saying that they have completed all the steps and company's merger with Videocon D2H has been effective from today. That particular counter needs to be watched out for. Remember, that announcement came last year, and this particular merger is now effective. Also on March 26th, Dish TV will hold a board meeting which will take the Videocon D2H merger forward. So we'll have to watch out for those board meetings resolutions as well. Let's take it straight to a CNBC TV 18 exclusive, and we caught up with Neelkant Mishra of Credit Suisse from the sidelines of their conference to get a sense of his views on the current state of the banking system, currency as well as the Indian markets.
What has happened over the past 5-6 weeks has been quite worrying. So what has happened is that the NPA recognition issue has been changed. So all the alphabet soup of S4A, SDR, etc. has been replaced with just IBC. What this does is it brings forward a lot of the loss recognition, so this erodes capital for the banking system. The bond yield increases that we have seen have also eroded capital for the banking system. In addition, the change that 50 crore and above NPAs can be investigated for fraud means that there can be significant reluctance among the bankers, especially the PSU banks, to issue new loans. Now, if 2/3 of your banking system is reluctant to issue new loans, then there is no way that the economy can accelerate. The sentiment by and large here seems to be quite cautious on India, that there's something wrong. See, that is the issue, right? So the currency is looking a bit wobbly. The bond yields have spiked. The term premium, if you were an observer, and I've stated this now for the last several months, if you were an observer of the Indian economy and if the bond yield and the term premium was the only thing you were looking at, you would say that there is a crisis brewing in the economy. Political developments, the concerns around the fact that there is uncertainty on how banking system profitability may emerge over the next 12 months. All of these are issues that people are grappling with.
Sell off in a couple of these frontliners on the Nifty, which is virtually at the low point of today's trading session. The likes of M&M should come up for you. That one's at the low point of the day. And at the same time, we've been speaking about L&T. Cipla, that stock should come up for you. Had a wobbly week day before yesterday, was down, then recovered from those levels of 522, and now Cipla should come up for you. There it is at the low point of the day as well. But another stock which is rejoicing in trade today is Sun Pharma. In a major breakthrough, the company gets its much awaited US drug regulators nod for the specialty psoriasis drug Ilumya. Ekta joins us with more details. Ekta?
Well, important news which came in for Sun Pharma last evening, where they have received approval for a plaque psoriasis drug called tildrakizumab, and that is basically going to be a branded drug in the specialty segment that Sun Pharmaceutical is going to launch. Now, remember that this approval is actually expected to be quite competitive. It's already quite a competitive market that Sun Pharma will be launching this branded drug in, but the approval itself is considered to be quite a milestone approval for Sun's specialty foray in the US. Remember that this would mark its third specialty drug in the past 18 odd months that it's managed to sort of launch or create a foothold on in the US markets. Now, this particular product is expected to be launched in the first half of FY19. It is, like I mentioned, expected to be a competitive market with around 5 or more players. The market size around $8 or $9 billion, and it is growing in single digits. So, interestingly, the street is quite divided in terms of what exactly Sun could do in terms of peak sales. So, the street is estimating anywhere between $300 million to $500 million in terms of peak sales, with a market share of 5% to even 10% for Sun Pharma. It obviously depends in terms of the kind of build up for the drug that they manage in the US market, given the kind of competition that already exists. But having said that, the management has stuck by their guidance. They did say that they should hear on this particular drug in the month of March. That has come through, and hence the specialty segment foray and the fact that they're making strides in it would be considered positive despite the kind of competition we're seeing on this drug.
All right, some bit of positive news coming in on Sun Pharma. Thanks so much for that, Ekta. Now let's focus on the commodity space, especially crude oil prices, and they are at 7-month highs, and that's really impacting the overall oil and gas basket. So ONGC is up in the green, while the oil marketing companies like IOC, BPCL as well as HPCL are really under pressure today. Manisha Gupta is here to take us through more details on crude oil. Manisha.
Well, thank you so much for that. Yes, we have gained 10% from March lows for crude. It's trading at a 7-week highs, and 5% of those gains actually have come in for this week itself. You have seen lots of supportive factors to begin with. It is the US weekly inventories that have declined, not just for crude, but for gasoline and distillates as well. The weakness in US dollar, which has come in post the US Fed meeting announcement yesterday, also seems to be supporting many of these commodities. And add to that, the strong demand estimates going forward. The OPEC and allies have a compliance of nearly 134% put out for their agreement to cut output. And then there are geopolitical tensions between Iran and Saudi Arabia. You have seen Venezuela tensions also continue to see a dip in case of their crude oil production. So all of that is a perfect recipe of some more support that you can see in case of crude oil prices.
All right, thanks a lot for that, Manisha. Just keep your eye out on the markets. Index heavies are selling off a little bit. HDFC Bank is off the high point of the day. Along with that, we have ITC2, which is currently at the low point of the day, leading the Nifty as well as the Sensex, which are at the low point of the day. But the race for the cement space, Binani Cement heats up, with Binani's auditor warning that they flagged off potentially suspect deals. Earlier, we spoke with both Mahindra Singhi, the group CEO of Dalmia Bharat, as well as KK Maheshwari, the managing director of Ultratech, to get their views on the deal. Listen in.
IBC process, which has evolved so far, has made total process very flawless, very transparent and very legal. And particularly the new guidelines which came out before this bid of Binani Cement was started, that how marking would be done, how financial numbers would be considered, how other qualitative numbers would be considered, that all were clear.
RP is saying something, another bidder is saying something, and this is what lends the entire process to total coming under question.
We could find that there are certain related party transactions, there are certain suspicious transactions which are there. So based on that, we could evaluate that how the asset is. So something new not has come, except that earlier we thought that these are related party transactions, they are suspicious transactions, but now with the revelation in today's newspaper that Hari Bhakti and company, a renowned chartered accountant audit firm, has come out with forensic audit report that there may be a fraud of, say, 2,300 crores.
At no stage of the proceedings has RP ever shared with us any such findings pertaining to any fraudulent transactions which they might have discovered. RP is managing the company now for whatever last 7-8 months. Maybe they were aware of it, but certainly it was not put out to in the knowledge of resolution applicants, and certainly not in our knowledge.
Fortunately, with the robust legal system in place, robust IBC system in place, there is no alternate deal. And second, once you are in IBC, you can't go out. And that's why this deal is ours.
We cannot comment about other resolution applicants. If they were given more privileged information than us, then we cannot comment about that.
Look at the markets, and weakness really persists. In fact, it's gone down deeper in the last 20 minutes of trade. Take a look at Sensex, down about 73 points as we speak. Nifty 50 is down almost 22 points. And what's taking a sharper knock has been mid-caps, but now Bank Nifty is also down 0.3%. Adani Ports, that has really come to the low point of the day. Along with that, Ultratech Cement, that has also lost a lot of weight and is at the lowest point of the day. So markets not looking good, and as far as advanced decline is concerned, heavily favoring the declines at this point. All right, moving on to some market opinion then. We spoke to Sanjay Mukim, the director at India Equity Strategy of Bank of America Merrill Lynch, and he says that valuation still not in the buy zone. He is, however, overweight on the financials. Hear him out.
I don't think valuations have gotten into a territory where you can comfortably ask for people to buy yet. I mean, frankly, if you look at the Nifty, it's still only back to where it was in December, and in several mid-cap stocks on the Midcap Index, PEs are not even back to where they were in December. So yes, there is an anchoring bias. Market has corrected from the top, but I wouldn't say that we are in comfortable valuation territory. Just our house view isn't that crude will run away in a hurry. We think that crude remains range bound in the mid-60s at best. So financials, we are overweight. We keep arguing that growth is going to continue to work until we start to see a major global correction. Growth is the style that will continue to perform. And within the financials, our clear favor is for private sector, consumer oriented. I do think that you need to see some resolution to the current issues before these stocks actually start sustainable upside. So very, very selective positioning in public sector banks.
All right, and one stock on our radar is Reliance Communications, down about 10-11% from the high point of today's trading session. In a setback, the Supreme Court has directed the company to maintain status quo with respect to the asset sales. Ashmit Kumar joins us with more details. Ashmit, what are you gathering?
So, well, what we understand is that RCOM had moved the apex court basically to seek a reversal of the Bombay High Court as well as the NCLT orders. In both these cases, both the Bombay High Court and the NCLT orders had directed RCOM to not go ahead with its sale of assets. And that was one thing that RCOM had objected to. RCOM raised that question today before the apex court. What's interesting is that the apex court, while it has agreed to hear the application, agreed to hear the question of sale of assets to recover money, RCOM even argued that the sale would be made to Reliance Jio. The amount realized to be realized would be as high as 25,000 crore rupees. On the back of that, what the apex court has done is that it has agreed to hear the application, but at the same time, Supreme Court has directed that as of right now, no sale can go ahead. RCOM and Reliance Jio will have to maintain status quo with respect to the transaction involved. And what's interesting is that the State Bank of India, which is one of the key lenders to RCOM, SBI had also moved the apex court, backing RCOM to allow the sale to go forward. Nonetheless, the apex court has said, as of right now, status quo needs to be maintained by all sides. No transfer of assets, no sale of assets to take place as of right now. The next key date to watch for will be April 5th. That's when the Supreme Court will hear the matter once again and is likely to give clarity on whether or not RCOM can proceed with the proposed sale of assets to Reliance Jio.
All right. Thanks so much, Ashmit, for getting us all the details and the courtroom action as well. Reliance Communications stock is down. It's disappointing news coming in on that front. Now, on to some news coming in from New Delhi. Now, the government has released the Draft Defence Procurement Policy 2018 for comments. My colleague Rituparna Bhuyan has all the details. Ritu, good to have you on the show. Now, what are the key recommendations here and what is it set to achieve?
One big difference between this draft and previous defense procurement policies is the presence of specific targets. For example, this draft talks about achieving a turnover of 1.7 lakh crore in defense goods, also talks about additional investment of 70,000 crore and creating about 2 to 3 million jobs and defense exports of 35,000 crore. And these all targets are in a 7-year horizon ending 2025. Moreover, it has some specific recommendations on how to achieve those targets which have been set. For example, this draft talks about allowing 75% FDI in defense through the automatic route for niche technologies. However, it has not explained what is niche technology and how it would be basically considered for automatic route. It also talks about how auto component manufacturers will be encouraged to manufacture aerospace components. It talks about how 2 defense corridors will be set up with central assistance of 6,000 crores. It talks about having a 80 to 100-seater civilian aircraft ready in the next 7 years. Last but not the least, it talks about achieving self-reliance in 13 weapon systems, including fighter aircrafts and warships and small arms. Now we'll have to wait and see what kind of policy initiatives get taken in the final version of the Defense Procurement Policy 2018. With that, it's back to you.
All right. Thanks a lot for